This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, May 20th, 2015. Euro dollar. So despite the recent setbacks that we've seen off the recovery highs that extended all the way up towards 114.67, the market still remains in recovery mode off of the break of that neckline several days back of a major double bottom. At this point, only a break and close back below the neckline at 110.52 would put the more immediate pressure back on the downside for a more meaningful bearish resumption. But inability to do so will keep the recovery structure intact, with the market potentially seeking out another higher low ahead of another fresh upside attempt back above those recent highs at 114.67 and into the 11500s. Sterling dollar. So cable has seen some nice setbacks after putting in fresh 2015 highs in the previous week, though the market is now trading back towards some key previous resistance, now turned support in the 155 area. If the market can hold above 155 on a daily close basis, it will keep the recovery intact and open the door for fresh upside, potentially back towards the 159 to 160 area. But a close back below 155 would put the more immediate pressure back on the downside for a bearish trend resumption. Dollar yen. So dollar yen has seen some nice gains in recent sessions with the market trading back up towards 121. But again, over the medium term, the market remains locked within a choppy consolidation, and so no real clear directional bias just yet. A break back above the recent highs this year at 122.03, that's a 7-year high, would be required to force a shift in the structure and open the door for a bullish resumption towards the 125 to 130 area further up. Otherwise, it continues to be sideways trade for this market. We are, however, seeing some coiling of moving averages, which do warn of a more meaningful break over the short term, and given the broader bullish structure, this could be to the upside. Really only back below the recent lows that we saw at 118.23 would take the immediate pressure off the top side in dollar yen. Euro Swiss. So Euro Swiss has seen a little bit of a setback in recent sessions, though the market is still trying to recover out from recent lows at 102.35. A higher low is now sought out at 103, which will be confirmed on a break back above 105.25, and this will open the door for a fresh upside extension back towards that February peak at 108.15. Really only back below 103 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So although we've seen some setbacks in recent trade in Aussie from those highs that we saw all the way up at 81.63 on the 14th of May, the market still remains in recovery mode, trading back down to that recent neckline that was broken of a double bottom. At this point, only a break back below recent lows that we saw around 78.63 would compromise the recovery outlook, with the market now seen potentially back towards recent highs that we saw back on the 14th at 81.63 and potentially towards the 8300 area further up. Dollar CAD. So dollar CAD has done a good job finding some really solid support in the 119s at 119.20 ahead of this latest rebound. Look for a break back above 23.50 previous support to strengthen the bullish outlook and open the door for a more significant resumption of gains back above 28.35 and towards the 2009 peak at 130.65 further up. Really only back below 119.20 would delay the bullish outlook. Kiwi dollar. So Kiwi looks like it's in the process of carving a more meaningful lower top at 77.44, with the market poised for a downside extension below the recent yearly low at 71.76 towards the 65 area further down. At this point, any rallies are seen very well capped, while only back above 77.44 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to surge to fresh record highs, with the market most recently trading up towards 21.37 ahead of this latest minor pullback. If the market can break back below recent lows that we saw going back to the 12th of May, which come in at 2084, this would take the immediate pressure off the top side and suggest the market could be in the process of topping out. But until then, the pressure does remain on the top side for further gains beyond 21.37 and potentially all the way up towards 2200 further up. Gold. So gold has seen a nice pullback in recent trade after the market broke out above some significant short-term resistance in the 12.25 area. At this point, the market is trying to look to put in a more significant base off that 2014 low at 11.31, but a break back above the recent highs at 12.32 will be required to strengthen this outlook and open the door for a more meaningful upside towards 1300. inability to hold on to gains followed by a break back below 1170 would compromise this outlook and put the pressure back on that 2014 base at 1131.